here's 7 best ETFs to invest in this year under the Trump administration. Donald Trump is the new president of the USA, and Trump has so many new policies in place and even long-term plans for the economy that could honestly make the stock market skyrocket by the end of his second term. So in this video, I'm going to help you navigate this new, kind of confusing, very volatile Trump presidency with 7 of the best ETFs to invest in right now, this year, and even in the future and beyond. Because if you want to make the most amount of money in the stock market, investing for just 1 year is not optimal for the most amount of gains. If you want to have the most amount of money possible and make the most amount of money possible, you have to invest for many decades and many years. So that's why I want you to be a long-term investor. There's so many things going on with this new Trump administration, like tariffs, interest rates potentially going down, fear of a large cap tech bubble, tax cuts, recession fears, and so much more. And yes, with all those things going on, I've still been investing consistently in my own ETF portfolio no matter what happens. I'll still buy all of my favorite ETFs in my over 6-figure ETF portfolio. Before I get started, I just want to say that Trump is a businessman, and he also wants to leave America better off than he found it. Now, what I mean by that is hopefully a booming economy, the stock market back to all-time highs and even more, as well as more wealth in this generation. Now, all those things sound great and all, but there's a catch. The stock market will definitely be volatile, very volatile. It will definitely go up, it will go down, it will bounce all over the place and just go erratically everywhere. And that's completely normal and that's completely okay, because stocks don't just vertical line, and there will definitely be sector rotations, market rotations in this new market cycle. But if you have a long-term mindset and plan to dollar cost average or DCA along the way, then all of these 7 ETFs are all for you. So let's get started. The first ETF is an S&P 500 fund or a broad market ETF. 4 of my favorite are VOO by Vanguard, SPLG by State Street, VTI by Vanguard, and even VT by Vanguard. All of these ETFs are literally some of the best ETFs for long-term investing because you literally have hundreds, if not thousands of companies with so many sectors of the stock market all in one convenient ETF. Now, which one to choose is the real question. If you want to invest in 500 of the largest companies in the USA, meaning large caps only, then go with either VOO or SPLG. Want thousands of large caps, mid caps, and even small cap companies, then go with VTI. And if you want thousands of large, mid, and even small cap companies and even international stocks, then go with VT. All of these ETFs have a solid dividend yield of around 1 to 2%. All of their expense ratios are also insanely low. And lastly, their performance has been amazing, averaging over double-digit returns annually over the last 5 and even 10 years. Now, in my opinion, I think that everybody should at least have this ETF category in their portfolio no matter what happens under Trump, because I personally have around $100,000 invested in both VOO and VTI across all my investing accounts. The second ETF is a growth ETF. Growth ETFs are definitely going to be the most volatile ETFs that you can think of, but they can also offer potentially the highest returns possible in the stock market. They also have the highest risk possible, but also the highest returns possible, yet they also do have some of the largest and most profitable companies in the stock market and some diversification as well. Some of my favorite growth ETFs are SHG by Charles Schwab, QQQM by Invesco, SPMO by Invesco as well, and then lastly VONG or VONG by Vanguard. Now, I invest in SCHG as my top position in my Roth IRA, but I also hold QQQM as well. Now, in my opinion, SCHG is a proper growth ETF, as it provides access to large cap US equities that exhibit growth style characteristics, and this one is definitely my top choice. There's exactly 228 stock holdings in this fund from top names like Apple, Nvidia, Microsoft, Amazon, Meta, and Broadcom. Now, its top sectors are technology, followed by consumer discretionary, communication services, healthcare, and financials. A lower dividend yield is completely normal for any type of growth ETF, this one being around 0.4% and a low expense ratio as well of exactly 0.4%. The returns of this fund have been absolutely insane, of around 15% annually over the last decade and around 20% annually over the last 5 years. The third ETF is small cap ETFs. Now, small cap ETFs definitely offer the highest upside possible, in the Trump administration era, yet they also will have volatility as well, just like their large cap counterparts. However, small cap ETFs also offer diversification as well, since all the stocks in this video, or at least ETFs in this video, are large cap ETFs which aren't including small caps in their fund. Now, another thing is interest rates are expected to decrease and even go down throughout Trump's presidency, which will allow small cap stocks and small cap ETFs to benefit as well when rates go down. Now, not only that, but also tax cuts and even a looser regulatory environment under Trump's new policies and mandates will also heavily benefit small cap ETFs as well. My three favorite small cap ETFs are XSMO by Invesco, IWM by iShares, and my favorite of AVUV by Vantis. There's exactly 762 stocks in AVUV, so diversification is key here. Some of its top holdings are GATX Corp, Air Lease Corp, Alaska Air Group, Matson Incorporated, Slim Corp, and Archrock Incorporated. There's so many sectors in this ETF like financials, industrials, consumer discretionary, energy, and technology. The dividend yield is around 1.8% with an expense ratio as well of 0.25%. The returns of this fund have been absolutely insane, of around 18% annually over the last 5 years and over 13% annually over the life of the fund. Now, small cap stocks are definitely super cheap and very low price compared to large cap stocks from a valuation perspective. Now, the hope is that Trump has a post-economic boom and leaves the economy in a very strong position post his term, where small caps will definitely benefit if this happens. The fourth ETF is going to be international ETFs. Now, I know that international stocks aren't the most fun, they're not the most hyped, they're not the most liked, they're not the most, popular funds, but with Trump's tariffs in place, it will definitely push the world away from the USA into international stocks, hopefully. Three of my favorite are VXUS by Vanguard, VWO by Vanguard, and VEA by Vanguard. My top choice for this category is definitely going to be VXUS by Vanguard because it has both developed and emerging markets for global diversified exposure that is not in the USA. There's a whopping 8,580 stocks in this fund, so it has so many stocks in this one ETF. Some of its top holdings are Taiwan Semiconductor, Tencent, SAP-SC, Alibaba, Novel, and ASML. Of course, we have every region and market that you can literally think of, from emerging markets, Europe, North America, Pacific, Middle East, to virtually every developed and emerging country economically that you can think of as well. The dividend yield is on the higher side of things of around 3%. The returns of international funds have been kind of slow and lackluster of around 5 to 7% annually over the last decade, but it's recently actually outperformed US stocks over the last year in 2025 and may continue as well in the future. The fifth ETF category is twofold, either a dividend or a consumer staples ETF. Now, dividend ETFs are great because if we're in a recession, stock market crash, economic downturn, dividend stocks and dividend ETFs are amazing because they will still pay a dividend, so you can have some cash flowing passive income no matter what. Dividend ETFs also have more value stocks than growth stocks, which are better during times of volatility, which can also be great as well for more safer, stable, and more reliable returns. Why I included consumer staples in a ETF category with a dividend ETF as well is because consumer staples also has the same characteristics as a dividend category would. They have a dividend as well that's pretty good in my opinion, dividend growth and also value-oriented companies in this one sector for a relatively good sector as well during recessions, during booms, during any type of economic cycle. Consumer staples ETFs are super crucial to the economy. Now, if there's a recession or a volatility in the stock market, people will still spend so much money at these consumer staples companies in the consumer staples sector because they have so many sticky business models and products that people will literally spend all their money on any time of the day, any time of the week at these companies, which makes it a super strong sector no matter what happens in the future and even during Trump's presidency. Three of my favorite dividend ETFs that can do well in the Trump era are VYM by Vanguard, HDV by iShares, and SCHD by Charles Schwab. My top consumer staples sector ETF is definitely VDC or the Vanguard Consumer Staples ETF. My top dividend ETF for 2025 is definitely going to be SCHD. Now, if you want to know why, check out this video I made for you guys right here. Let's talk about VDC, where this ETF has 103 companies. Some of its top holdings are ones that you all know and love, like Costco, Walmart, Procter & Gamble, Coca-Cola, PepsiCo, and Philip Morris International. In terms of its dividend yield, it's around 2.3%, with a low expense ratio as well of exactly 0.09%. The returns of this sector have been pretty solid of around 8% returns annually over the last decade and over 11% returns over the last 5 years. So if you want recession-proof, Trump-proof, and even bulletproof ETFs like these ones, this category is definitely going to be one for you. The sixth ETF is a sleeper, and it's a gold ETF. A commodity like gold is definitely one of the safer assets for investors during times of uncertainty and volatility as well. Usually when stocks fall, investors flock to gold for a flight for safety. Gold is also a very diversifiable asset because it's very uncorrelated to both stocks and even uncorrelated to both bonds on average as well. My favorite gold ETF is IAU, the iShares Gold Trust ETF. The iShares Gold Trust IAU ETF seeks to reflect generally the performance of the price of gold, where it's used to diversify your portfolio and protect against inflation as well. And the returns have been amazing as well, where it's just recently been outperforming stocks as well, but in general it's done over 11% annually over the last 5 years and around 7% annually over the last decade. The last ETF is going to be bonds. Bonds are considered the lowest correlated to stocks, and they're also a flight to safety because they're backed by the US government. Now, my favorite type of bond is going to be short-term treasuries compared to longer-term bonds under the Trump administration because right now they offer the best risk-to-reward ratio. Some of my favorite bond ETFs are going to be SGov and VBIL. VBIL is a new Vanguard ETF with a low expense ratio of just 0.07% and a current bond yield of around 4.3%. Overall, bonds are great because they offer downside protection and volatility reduction, which can be great because we're definitely going to be in a headwind of so much volatility along the way, so keep bonds on your radar. Now, if you want to see my entire ETF portfolio whenever I buy my own ETFs on a weekly basis of around $5,000 every single week, check out Blossom as a free investing app in the link in the description of this video. I'll see you there on Blossom. Now, if you guys like this video, please give it a like because this cute puppy did. Now, if you guys want to see my latest update in my entire ETF portfolio, check out this video right here. Now, if you want to see other great ETFs to invest in, check out this video right here. I love you guys so much. Crush in the stock market, and I love you guys again. Take it easy. Peace.